And Frank and I were chatting. We also, of course, have traded together for a long time. We're talking about CPI. We're talking about labor data. And there was a pivot here recently where, labor data became more interesting to the market. Specifically, if you guys remember August 5th, where you had this ginormous plunge in the stock market. NASDAQ at one point was down 19% from the highs in just a few weeks. It was a sharp sell-off. And that was a lot of the reaction to sort of, remember the carry trade unwind, the Japanese yen getting real strong. Well, that was in response to the jobs data that came in from the United States. Jobs data was all the centric focus for a little bit because people started getting fearful about a potential recession. But then you have this pivot back where, okay, labor data has actually since then come in decently okay. Yes, you had a bad NFP report last time, but we can kind of put labor data to the side here because, again, you had a really good beat the month before. You had a really bad report this month. But then you also have unemployment rate, which is not necessarily as threatening as perhaps it once was, right? It's starting to maybe cool off a little bit. Unemployment claims, we've seen this come in each week, relatively tame, not too threatening. So the bigger question now is, I don't think it's nearly as important as back to where we were a couple months ago, CPI in clear view. Focus now, in my opinion, is very much on the inflation story. Forecasts this morning, guys, are actually for CPI to go up to 2.6. Last time they forecasted 2.3, we got 2.4. The question that we have in front of us now is, okay, this part of the story, if you will, for the Fed has been a pretty good one. Inflation has really come down. Prices are rising, but rising a lot slower than they were a couple years ago. Now, when we talk about inflation throughout history, if there's any other history nerds out there, inflation, you will be well aware, is what is oftentimes referred to as an empire destroyer. Inflation, high levels of it, can completely derail a power in the world. The Romans, by the way, struggled with inflation, high amounts of inflation, for centuries. And it ultimately was a large contributor, according to historians that would know way more than I do, a very large contributor to the fall of the Roman Empire. Now, why are we talking about the Roman Empire? Well, because although times have changed, technologies have changed, human beings, we do similar things over and over, right? So watching inflation is very, very important to the story of the empire, which is the global reserve currency, the dollar. The dollar's been raging up recently, and I want to talk about that because that's very important. The dollar index is almost at 106. It tapped 106 yesterday. And the question is this a red flag? Is this concerning to us? And the answer that I would give you is this a red flag, like major red flag? I would say no. I think it's more of a yellow flag. It's a yellow light. Because the dollar being where it's at 106 is largely, in my view, due to other currencies being weaker than the dollar, not necessarily that the inflation in the United States is going crazy and the Fed's going to have to rate hike. That's a different type of dollar strength. If, however, I say yellow flag, because if that yellow flag turns red, meaning we start to see the dollar really go up, if it accelerates higher from here, that could be on the backs of high inflation, concerning changes in Fed monetary policy plans going forward, meaning does the Fed start signaling that they want to pause rate cuts next year? That would be very alarming to the financial markets. Specifically, I'm talking about stocks. And by the way, gold would not like that either. Gold is another topic that I do, of course, want to discuss here with a few minutes to go before CPI. Gold is, this CPI report is very important for gold. If inflation is in fact bottoming out, so let's go back to our inflation chart for a second. If inflation is coming down and then sideways and then down again, right? That's what we've got. If the story is that we are bottoming out, flattening, or even worse, starting to rise again in inflation, we have to be open-minded to what that means for markets. Rising inflation may put a dent in the Fed's, soft landing story. I'm not necessarily saying I think that's what's going to happen. I'm telling you, we need to watch to see, because if you get evidence today, let's see, what last time we had a higher than expected CPI. The time before that, we had a higher than expected CPI. If you get a higher than expected, let's say we get 2.7 today. Let's say we get 2.8. If you get a higher than expected CPI today, then that would be the third one in the row where inflation numbers came in higher than forecasted. And 3 in a row is a figure that I like to, it's sort of a subjective number that makes sense to me. If inflation falls, for example, 3 times in a row more than what was expected, then that shows some really good disinflation is sort of trending in the market. In fact, we saw this 5 times in a row, right? And that got people real excited. That's why the stock market has pumped like crazy, is inflation's cooling, cool, the Fed can cut rates. What dents that story is inflation numbers coming in higher than expected for a new trend. That also hurts the gold story, because gold likes rate cuts as well. Gold, if you are somebody out there who is a gold bug, as we call them, if you're a gold bug, if that's what you trade, what you need to understand about gold is gold wants inflation to cool off so the Fed can cut rates. In fact, what gold really wants is the economy to cool and inflation to cool, because then you just get a screaming move up in gold. Get over here. Come here. A little closer. Come here. Gotcha. All right. Let's see what we've got for CPI numbers coming out here in just a second. Okay, initial reaction, dollar index is a bit lower here. Stocks slightly higher, gold slightly higher. My guess is inflation just came out at I'm going to guess 2.5. Do we get 2.5? 2.6. I was off. 2.6. As expected, perhaps some of the fears that inflation was going to be worse than this are out of the market, and maybe that's why we're seeing a little bit of a bump in stocks and gold. Dollar index is coming down here this morning a bit. So what do we do with this? What does this mean, Nick? Tell us. Well, it means inflation is it's higher than it has been the last few months. 2.6 is moving away from our goalpost of 2% inflation targets, right, according to the Fed. But at least it wasn't a 2.7. We have to think about this. Always think, guys, when you're thinking about economic data, about forecast, right, the consensus amongst analysts and amongst the market, where inflation is expected to be, and what actually comes out. These two numbers are often different. In fact, look at this chart that I'm staring at, and you can see the blue bar oftentimes comes out differently than the red dot. The red dot is the CPI forecast, and the blue bar is the actual CPI that comes out. You can see oftentimes it is different, and the market moves the most, usually, when these two things are further away from each other, right? When you get a big divergence between what was expected and what actually comes out, that can cause some serious volatility in the market. I gotta add Bitcoin to this chart because now I'm a Bitcoin guy apparently. So I gotta put Bitcoin onto my list of screens here. Anyway, stocks are higher here, perhaps just shrugging off the uncertainty that was, are we going to get a 2.7? Are we going to get a 2.8 inflation report? 2.6 is not so bad, right? I guess it's not great because we're coming up from our lows of 2.3, but you know, not worse than forecasts, I guess. Speaking of oil, oil's down at 68.7, guys. The idea here is that, and by the way, I spoke yesterday, I said oil is very low here, but oil can go much lower. You have to understand there's a couple things that could get oil to go much lower. Some of them good, some of them bad. Peace could get oil to go lower in a good way, right? Less concerns about supply constraints. Maybe we lift some sanctions. Maybe we get to a point where there's not, everybody just locked up and boycotting each other. Maybe there's we can only hope for some sort of peace. Anyways, the other scenario is not so good. If you get a severe slowdown in the economy, that is another thing that could send oil. Let's do a history lesson. And again, this market, whether you trade oil or not, pay attention. This market is really important to everybody. It has a lot of correlation, by the way, to the 10-year treasury. Not so much recently, but inflation is very, there's some correlation between inflation and oil prices. And we've talked about that many times on stream, but just as a reminder, oil prices can tank, pun intended, tremendously in periods of economic slowdown. In 2015, we saw one of the most recent periods of deflation, and people sometimes will say, when are prices going to go back down, right? We all in theory, on paper, would love to go to the grocery store and it costs less money, or go buy a house and it costs less money. Yes, that is true, but unfortunately, what typically happens for prices to go down, it's usually off the back of recession and really tough times where people are losing jobs tremendously, and it's tough times out there for people, like way worse than what we've got now. Everybody losing a job is no fun, and those are the scenarios that typically get oil prices to plummet. So that's something that I don't necessarily think is on the horizon, but it's always something to consider with oil prices. Currently, however, oil prices are low. I think that this is a beneficial thing to the inflation story. And again, today we came in as expected. It hasn't populated yet, but the Edge Finder will put it right there, basically showing a slight uptick in inflation, but not worse than what was expected according to forecasts here, the red dot showing forecast, right? Current top setups on the Edge Finder, we've got stocks still getting bullish readings here, which has been a strange but very effective outlook here the last few months. Even though it feels like stocks are high, they have continued to trend higher. I am currently trailing stops and managing active long positions that I have on the indices. That is one of the areas that I have the biggest positioning on the long side. However, I'm trading those things cautiously. I very much understand that when you're at all-time highs with stock market stuff, there's sometimes melt-up events that happen, and they can go on for so much longer than we think. Like the NASDAQ could just go do this for the next few weeks. In fact, I do actually think, if I'm being completely honest, that the Trump trade could at least go on relatively unbothered until, what is it, January 5th? When is the new president sworn in? Regardless, you get my point. I think there's a bit of a runway. The buy the rumor trade may be actually better than the trade itself. So let me explain this. Again, I'm not here I'm not a mega Trump person. I'm just pointing out that for the stock market specifically, let's just detach everything from our emotions for a moment. The market is telling you that it is excited about the prospect of lower taxes, lower rates, and less regulation for businesses, right? That's the idea. Now, whether you agree with that, whether you disagree with that, whether you think they should do something different, for a second, it doesn't matter. The market is excited about that, and there's a rumor that those things could be good for the market. Who knows if they're going to be? I don't claim to know that for factual, purposes. I'm not here saying that is definitely going to make businesses way more successful and the consumer way more successful and unemployment's going to go to zero. I'm not saying that. What I am saying, however, is the rumor is that it's going to. We'll see if the rumor comes true. But the point is, as a trader, we can just trade that moment. That's the beauty of being a trader as opposed to just a long-term investor. There's nothing wrong with long-term investing, but with long-term investing, you kind of just buy stuff, you close your eyes, and you hope that when you open them again, there's something left in your account. That's long-term investing for you. So, and as a trader, you just know very quickly if there's nothing left in your account. But where's my sound effects? There we go. There we go. Jokes. You shouldn't be risking too much. You shouldn't lose all your account very quickly. And if you are, your sizing is severely wrong. Anyways, my point that I'm getting at is, again, detach whether you like Trump or not. Just the moment right now is that there is optimism around certain things. And I think that until we actually start to see in action Trump, there's a rumor trade that I think has a lot of potential. And I've already taken, longs before. I'm long on Bitcoin. And all I can do is manage appropriately. In fact, if we take out these highs, what would be appropriate for me to do is probably trail this stop loss that I have on my Bitcoin trade and just say, look, I'm not going to get greedy with it. I'm simply going to manage the position and follow the trends that I'm seeing right now. The trends that I see right now are optimism surrounding the Trump presidency for risk on assets, not necessarily for, social political movements or things like that. I'm not saying anything about that. What I'm simply saying is that businesses are excited that they're going to get less taxes, more money in the pockets of businesses. Whether you like that, whether you dislike that, whatever, it's not what we're here for. We're here to trade the market. The market is excited about that. Risk on assets are performing really well here. And I think that catalyst could last for a few weeks. And if I'm wrong about that, right? Nick, you're sounding all sorts of fancy language about this stuff, but what if you're just wrong? And what if the market just tanks the next few weeks? Well, again, that is where I admit that I'm sometimes an idiot and I don't know everything. And as traders, you kind of have to be able to do that. So for me, what that means is that, okay, the Trump trade is happening. I'm going to simply trail a stop and I'm going to manage positions that I have running. And I'm not going to get greedy, and I'm not going to make a gut call prediction that, everything's going to be rosy under Trump. And again, I'm simply trading the markets. And I think that, and I'll say this, when Biden got elected, I was super bullish on the market too, because, right, the prospect of, we know who the president is, there's this window of time. It's the fourth quarter. Seasonally, it's a strong time for risk assets, right? Let's go look at that. I want to show you something. It's important that we discuss this as well. It's not about Trump. It's not about Biden. It's not about politics whatsoever. It's about the antics of the environment that we're in. November is historically a very positive time for stocks. November and December. The Santa Claus rally, Thanksgiving period. These are times that on average, not every year, on average are good for stocks. They're good for things like Bitcoin. It's a positive period of time for risk assets, right? So when I'm discussing these things, I'm not saying in absolute terms that they're going to go up. I'm saying that I have identified these theories, these ideas. They are theories. They are not certainties. And I'm trailing a stop loss. I'm just managing trades that I have on. I think they could continue, but I don't know. And there's a big difference. And as a trader, one of the most groundbreaking moments for me was when I realized I never know with certainty what's going to happen in the markets. So the only appropriate thing for me to do is to make educated decisions, educated guesses with small trading size per position. I'm not out here throwing 17% of my account on a call option that expires in 2 days, right? That is gambling, right? Educated guesses with a 55% win rate, right? On a 1-to-1. You're going to make money over the long term, but you might lose money this week. You might lose money this month. You might lose money this quarter. But over the long term, we're going to make more money than we lose. But the only way you stay in the game is by being responsible with your sizing, right? And making educated guesses that are backed not just by fancy price action patterns, but by fundamentals, right? Let's look at seasonal trends. Let's look at the commitment of traders data to see what institutional money's doing. What are they buying? What are they selling, right? These guys obviously employ like a floor full of PhDs in computer science and economists from all over the world to make decisions. So let's see what they're trading, right? Let's look at the put to call ratio to make sure we're not just trading alongside the crowd too much and that we, maybe spot opportunities that could come in. Data plus educated guesses plus risk management is the key to the profitability that I have found in the markets. I am not the world's greatest trader. I'm not here telling you that you're going to be the greatest trader if you do the same things as me. I'm simply going to tell you that this is what has worked for me after the years and years and years that I put into learning this stuff and building tools and everything that I, preach and talk about. That's, the idea. Nick, how's the euro yen trade going? Yeah, euro yen was an idea on the Edgefinder the last few weeks, and I finally got the pullback that I was looking for. I think it's done well here this morning. Yeah, it's done okay. We're in profit on this position, but nothing really to write home about. What I'd like to see before really trailing a stop on this thing would be a break through these highs. So we've got resistance here. If we can get above those levels, I'll start trailing a stop on this one. And if we just go down and take out these lows, then it wasn't the trade I was looking for anyways. So euro yen, I do like it. Very nice level of support here. Generally speaking, I'm pretty risk on at this moment, which means for me on the currency front, shorting the yen. We also have noticed a very hefty short position. 63.4% of positioning here on the COT data is on the short side of the Japanese yen. That gives me some extra confluence here. For example, gold this year has been incredibly bullish by institutional money, and that's been probably the trade of the year, has just been long gold, right? So, I like the yen short idea. And when I say yen short, remember that if you are long euro yen, you are long euro short yen. Gold is up 0.5% here. It's sitting at support. I'm very curious to see how levels react here. I'm pretty neutral on gold at this time. So I'm not really interested in taking any trades. I think some of the unending uptrend that we've seen in gold this year might be behind us for now. Who knows? It might be a 2025 resurgence in gold. There might be another, uptrend round. But currently what I'm seeing is that economic data in the US, in fact, I played around and fixed my gold scanner here. I'll show you this data point here. So, okay, we got the CPI data in already also. This is awesome. So we got a -3 reading here on gold. So that's not very bullish. It's not too bearish. On the Edgefinder scoring system, a -5 or lower is considered bearish. GDP growth was better than forecast. That's going to be, it was worse than forecast, which is a positive thing for gold. We always look at, for scoring, by the way, we tend to look at the forecasted values versus the actual ones that come out. So manufacturing PMI came in lighter than expected, which is good for gold. Remember, gold thrives off of economic uncertainty, fast rate cuts, geopolitical conflicts, etc. So when we're attempting to score an asset like gold using macro data, this is our function. This is our algorithm of how we do this. Okay, and each one of these, by the way, are contributing to the score. So GDP, positive, right? Manufacturing, positive. What about services PMI? Services PMI came in better than expected, which is not good for gold. Retail sales, we get fresh retail sales data tomorrow, by the way. Inflation, right? Inflation today is at 2.6%, came in as expected here. And core CPI also came in as expected. So what we can see here is that sort of just neutral. There's some positives for gold. There's some negatives for gold. Until these things sort of all generally point the same direction, I'm really cautious on getting overly bullish or overly bearish on gold. So I don't really have a reading. If we're sticking to just technicals for a second, it's at a level of support, but I think the uptrend has sort of cracked. So I wouldn't be surprised if we just kind of go sideways, but we'll see. Again, I don't really have I'm not taking any positions on gold. That's not something that's actively on my, hit list at this time. Let's see. Let's just filter out and just do neutral, or I'm sorry, current bullish and bearish readings. Got some euro pairs here hitting up on the bullish side, euro dollar, euro kiwi, euro cad. I'm going to get really specific. If I take out minor currency pairs, you can see we only have 3 things: the euro, the FTSE, and the Nikkei. So kind of a light watch list right now. The only way I allow people to see my live trades is when I list them. I don't do it any other way. So Grandmaster J, HM Clock. Mike, again, if you make the claim that you're some market wizard that, is just amazing at trading, you've got to be able to prove it. I don't claim to be the world's greatest trader, but I'll still show you my live positions, right? I'll show you when I'm right. I'll show you when I'm wrong. I told you just a second ago that I entered Bitcoin early, took a couple $1,000 loss, re-entered it, and this trade has gone crazy. But you can't just say I'm the greatest trader. The only way you'll be able to see any of my trades is if you join me, right? How can somebody know that you're the greatest trader if you don't prove it, right? Why should anybody listen to you if you don't have any proof that you're good at what you do? In fact, I wish more people would think like that in the trading space. I wish more people would say to themselves, why am I spending any amount of time watching so-and-so creator if they do not show you their trading performance? Sometimes I go back and forth on whether or not I like the idea that I share my trading performance publicly. It's a lot of stress. It also sometimes makes me feel icky because I'm not here trying to just brag, but I very much genuinely mean this. Like, I know what it's like to watch content creators and be frustrated that they never show you their accounts. Just show me that you actually trade. So I do this frequently. This is my live broker, right? This is a US regulated brokerage. I trade on Webull. And I show this. It makes me sometimes uncomfortable because I'm not trying to just brag about it. But I want you to know that if you watch my videos and you invest time in learning, I'm showing you up front that I do what I say I do. I'm not the greatest trader in the world. I've actually underperformed the US stock market in the last 1 year, which has been a little painful. I've overperformed or outperformed it in the last 5 years by a pretty good long shot. I made a video on that recently. But I show you this just so you know at home, you're not wasting your time watching me. There are traders out there who are making millions and millions of dollars per year. I hope to be one of them someday, but I'm not there. I'm on my own journey, and everybody is, right? Everybody's on their own pace. But when I'm talking to the audience now. I know we're having fun messing around with Grandmaster in the chat, and I mean no disrespect, but genuinely, I want to encourage everybody who is listening, do not spend a single dollar or minute of your time watching people who will not show you their account, right? It's so important.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.